Good morning, everyone. Welcome to our Friday morning trading room, the end of another work week. I'm using air quotes when I say work week. All right. Yesterday, a very active, very bullish day. We'll take a look at the daily chart here on the NASDAQ. It'll give us a really good overview of what's going on. A nice big rally of the market during the overnight dipping, and then we just saw a very strong rally from start to finish. And now the market a little bit balanced again. We're back here around this whole 7,400 area. The market tipping just above 7,500 to the short side. So really kind of neutral here today. I'm not really sure which way it's going to go from here. Sometimes looking at a chart, you get a feel for the direction the market might be going. But right now, like I said, we're pretty balanced overall. Maybe slightly more bullish as I watch the Eagle and the Raptor both trade here on the other side of the trading band now. And the Hawk also becoming a little bit more bullish. We're only a couple of minutes into the day. I'm going to try to avoid doing anything foolish a little bit too early. While we're waiting for the market to unfold here, and I'll remind you again at the end of the session, I am not going to be available on Monday, this coming Monday. So there's not going to be a trading room this coming Monday, just so that you know. Well, that first micro macro cross actually working out quite nicely. Nice thing about the Hawk scalper is that normally your targets are fairly conservative. We're just looking, our scalp target, $50 per tick, or per tick, wouldn't that be nice? $50 per contract. And just a quick little move there. Usually attainable. And the first micro macro cross tending to be a fairly reliable signal overall. A lot of yellow bars here in the Hawk. That's kind of suggesting some neutrality in the market, especially as they're printing more or less the same price level. Looks like around 73.95-ish. First micro macro cross lower as we kind of retracing the same pricing. All right, well, something happened here in the market that they weren't too happy about. I don't think there's a report out today that's going to move the market quite like this. Fair amount of volatility for Friday. Also watching the E-mini and the Russell on my other monitor, and both those a little bit, well, the Russell's putting in a little bit of a rally, but the E-mini definitely content to be trading sideways here at the moment. So some big moves early on here. I'm getting the feeling of a sideways trading range. I know you guys hate when I use words like feelings. It's it's just an observation. Of course, you know, you can't really tell, but just kind of looking at what was preceding here, you see we're really stuck around this same price zone. These were also the prices that we were retracing toward yesterday's close. If you look at the end of yesterday's session, the market dipping to around the 73.70 area and trading back to around 73.90. And that's kind of where we find ourselves again. All right, got ourselves a nice little hard edge bounce going on. And that should tail off a little bit here. So I'm going to call it that we may see a little bit of a downtrend today. There you go. I'm going to step out on that limb, get out on that ledge, and call the market a little bit more bearish today. Now watch it rally back to the high. All right, this is now one of these discretionary signals. I considered actually this number 3 signal back here, just given that the market was emerging from a new strong move lower. Typically, the market will try to make at least 2 moves on the in the direction of a breakout. So if you see a violation of a significant uh, support or resistance area, you can normally anticipate 2 moves in that direction. So this is move 1, the move that caused the breakout, and then this would have been move 2. Likewise, if we break up here now, we can anticipate 2 moves. And again, the breakout move would be move 1, and then we can look for a second move. So knowing that allows you to time your trades a little bit better as well. '73, '75 to '80 zone seems to be quite sticky. Had a little scare here last night, not affecting us so much, but some of our neighbors. One of our neighbors was doing a little digging with a little bobcat style backhoe, and they hit a natural gas line. It caused a little bit of excitement in the hood. Okay, we're only 10 minutes into the session, but we're coming up at that quarter to the hour mark where I tend to sometimes take a bit of a stinker of a trade. I don't know what it is about that quarter to the hour area. The market sometimes giving you a good looking signal, but no follow through. Or maybe it's just that I've been sitting here for 15 minutes and now I'm bored. I feel like I have to do something. Fairly balanced today, it looks like. Here on the Eagle. Where did we open? Right about here. Oh, no, maybe not so balanced. Yeah, I still like to think that perhaps we're a little bit more bullish today than bearish than bullish. If this was a support area, the market coming down, retesting now after the breakout. Remember how I told you, if you think the market is in a sideways trading range, we're going to look for the breakout, the retest. There was a decent sell signal here. Another retest now. And we'll see whether or not they can stay outside of that trading range. If the market coming down from here producing a sell signal, that would be worth a try. I think. Look at the Raptor here now. When your trading band starts to twist up like a rope, that is another indication how neutral the market is, how sideways the market is. Not seeing a lot of follow through after that breakdown. We could end up producing a number one signal here on if the market continues lower, because the clouds are out of sync. So we're going to be looking for the clouds to come back into sync. Technically, that will be a cloud crossover. Remember, it does need to be preceded by a pullback, but that's something to keep a lookout for that number one signal to develop. So here the clouds go from bullish to bearish. There's a pullback there, is now your number one signal. All right, let's throw that back on the shelf for now. Oh, here was that eagle signal I was talking about. Oh, and it's going to run away on me. Oh, and I think I saw the number one signal just print. All right, so let's see if we get a second push opportunity on that number one signal. We do. Oh, come back here now. Things moving a little quickly. There we go. All right. Now, your call whether you want to try to stretch this one out. I think I am. I'll throw my break even on the other side here. And if the market bounces off of here, there is a chance we could move 2 full zones on our support and resistance suite. So this would be zone number 1 from the median line, that's that gold line, to the primary support line, that's that blue line. That's zone 1. And then this would be zone 2. So with the support and resistance suite, here I'll show you on the Falcon because we got a little less going on there on the Falcon. I didn't touch on this yesterday for the sake of the new owners. The support and resistance suite is an assortment of 21 support and resistance zones forecast for today's trading. No, these are not floor pivots. No, they are not Fibonacci retracements. Occasionally, they will coincide with one, and that's more by coincidence than design. The gold line here is the median line. That just tells you that this is the middle of the assortment. There's going to be 10 resistance lines above, 10 resistance lines below. The blue lines above and below are primary resistance and primary support. These 3 lines kind of set the tone for the day. If the market gets below the primary support line, it's going to tend to be a little bit more bearish. If it tends to get above the primary resistance line, it's going to tend to be a little bit more bullish. I think 3 times, only 3 times, I remember the market actually exceeding all 10 lines one way or the other. But it would be extremely rare to run out of support and resistance lines. Darn it. I guess I should have taken profit when I had it. All right, won't do that again. I think. So a good number 1 signal here. And like I said, we could anticipate that number 1 signal to develop. Now that we've traded back here, class, what signal will I be on the lookout for next if the market continues lower? Anyone? Anyone awake? Did I put you all to sleep? Ah, there we go. Mickey's playing. Way to go, Mickey. Yeah, way to go, Jim. All right. Yes, here we go. A number 3 signal. That's right. We're back into the hard edge. So if the market continues lower from here, we're going to anticipate a number 3 signal. Now, the thing with the number 3 signal at this point, it's going to be a little bit of a logistic issue. And by that, I mean, and we're going to pretend here for a moment that this bar right here is going to produce our triangle and hash mark, right? So we're going to get our, oh, well, look at that. Hard edge, I don't even need to pretend. And it's unfolding a little bit quickly, but that's all right. We'll still have the opportunity to show this. Okay, so now we've got the signal. We were anticipating the signal. And by the way, just for your own reference, if the market is unfolding quickly, you can always punch into a signal with your buy or sell buttons. So at this point, okay, we've got a valid signal. We have a number 3 signal. What are the logistics on this signal? Well, okay, the signal is here. 1 swing, 2 swings back. Theoretically, we could probably cover the trade right here. The profit target, however, the profit target's a little bit cozy to this little bit of a double bottom where the market bounced before. So the decision to be made here is, do I have enough room in this trade that perhaps I can do something with it? Maybe bring my stops down if the market starts to bounce prematurely. And it's tight, but I do have this little swing right here. So if the market continues a little lower, okay, there's a little bit of a hiccup right there. I could bring my stops in here. And what that effectively does is reduce my risk by about half. Why? I suppose you could even start with your stops right there, seeing how I rolled it so early. Oh, and there you go. I would have got tagged out. But that's the thing with the number 3 signal when it's so close to these other little swing points, the ones that, especially like a little double bottom here, that could be a little problematic. Remember too, if you're trading a quota, if you're only looking for 2 or 3 trades on a day, the overriding question is always, do I think this is one of the best trading opportunities I'm going to see today? If you're thinking maybe not, then feel free to pass on the trade. And you know what? If you choose to pass on the trade and the bottom falls out of the market, don't beat yourself up for it. Rather, try to learn from the experience. Try to look at this and say, okay, was there something here that I missed? Maybe I didn't see, maybe there was a big chunk of selling go through the market that I didn't notice, or maybe it's just a simple fact of staying with trend, or maybe I should be a little bit more aggressive on the trade, but rather than take 2 contracts, I'll lock it in and I'll throw a single on it. And if it works, it works. If it doesn't, especially if I start rolling my stops in, if I get tagged for $90 or $100, okay, well, that's not the end of the world either. Right? So there's always a lesson to be learned, and you should never beat yourself up for making a bad decision, because any decision is usually better than no decision. But if you've taken a losing trade, try to figure out why. Try to look back at it and try to learn from it. I'll share just a really quick story with you. I was coaching a fellow, and again, this is for the benefit of the new people in the room, but we had spent a lot of time working together, and he thought he was ready to make some live trades. So we log on and we're watching the signals develop. And of course, I get the question, well, Eric, do you think I should take this trade? And I said to him, it's not my money. I'm not going to trade your money. But all the signal parameters that we were looking for have been met. So it looks like it's a valid trade. All right. So he ends up taking the trade. It's something like this. And the market goes down. And he says, okay, good. The market's going down, and okay, well, market comes up. Oh, that's not good. Oh, what an idiot I am. How could I'm so stupid. And then, what an idiot. And he starts cursing and berating himself under his breath. I don't know if he thought I couldn't hear him or what. And then the market starts to go his direction again. It's like, oh, okay, I'm all right. The market's going back my direction. That's all right. It was a good call. Oh, okay, good. It looks like we're going to go on. And then the market turns again and he starts berating himself. And I said to him, what are you doing? I said, you took a trade, manage the trade. If you're wrong about the trade, okay, you're wrong about the trade. At least you didn't lose more money than you can afford. He took a $200 loss on the trade. You thought he wiped out his bank account the way he was going on. This is a fellow who used to boast to me how he would go to the casino on the weekend and lay 2,000 on the craps table. And he got bent out of shape over a $200 loss. Listen, folks, if nobody's told you this before, I'll lay it on you, and I hate to be the bearer of bad news, but trading, when you are a trader, you will incur losses. If anyone tells you otherwise, they are flat out lying. Now, I'll show you what I can to help limit your losses and to help keep you on the right side of the market, but it's all a part of the process. It's all a part of the business. We're speculating. Get used to it. Protect yourself. Manage your trade. Be selective about the trades you take. Okay, I'll put my soapbox away now. Mark says he grabbed a late filter entry signal. Where was that one? Let's see, 649. Oh, this is a bit of a struggle here. Yeah, a late filter entry. This is rare that this signal does not work out. So the late filter entry signal, filter goes out of sync, comes back into sync. Trend line itself never changes color. Stop placement would be a little bit tricky here because normally I try to stay 2 swings back. If you can't afford that, the crest where the trend line crests is often a good point. If you can't afford that, eyeballing somewhere just slightly above half is not a bad way to go either. But this one giving loads of heat and then finally not following through. That's rare. This signal, normally when it prints, is very, very reliable, but it does look like we're kind of stuck sideways. Mickey asks, I've noticed that on some days the Raptor filter has a 10 brick hawk size, and on other days the brick size is 12. Oh, okay, yeah. You know what? A long time ago, I made a change on my Raptor filter, and I keep forgetting to change it back. It 2 ticks on your Raptor filter is not a deal breaker. So if it happens to be set at 10, that's fine. The default is 12. Just take a look at how the filter is here. You're going to see it's not going to change it a whole lot. The Raptor filter, see, it looks identical. The Raptor filter is more of a guide anyhow. A guide to the market bias. You can see we had a big bearish bent here, and then all of a sudden it's got a little bullish, and then okay, yeah, it's still bearish. The bear is kind of outweighing the bulls, and now we're seeing a little bit of a bullish slant to the market again. If this develops into a larger bullish band, then I think we can certainly call the market balanced, and if not balanced, maybe getting slightly more bullish also. Oh, I see. Yeah. Mark says, when you were asking for the next signal, I said late filter entry. All right. I still think we've got a little bit of a bear bent to the market. Although we are going over and over the same prices. Sideways days can be kind of tough. All right, we got a little bit of a bullish rally. Again, we haven't really gone anywhere today. You know, we're seeing the same prices time and again. The bounce, I said 73.70, but we actually got lower than that. We got closer to 73.60 when the market turned, and now we're heading back here to around the 73.90 area, which again was that price zone that kind of held the market toward yesterday's close. And we're still kind of in that area. Nice little rally now. Here, the Geiger counter, a very bullish looking. Should see a little bit of follow through from that. The E-mini really congested here. So the NASDAQ moving around a little bit, but look at this tight little zone the E-mini is making. Just really not going anywhere. Regarding market assortment, people often asking me why I followed the NASDAQ versus the E-mini or the Russell. The NASDAQ, I think dollar for dollar is a pretty tough market to beat. A lot of people assume because the E-mini is a higher tick value, because it trades at 12.50 a tick, that you're making more money versus the $5 tick NASDAQ, but that's not the case. In fact, here, we got nothing going on. Might as well demonstrate this. So let's take this last move. So from the low of the move to the high of the move, okay, so there's the low of the move to the high of the move. That's $655 on the NASDAQ. Let's take a look here at the E-mini now. They should be dollar for dollar, they should be equivalent. or very close, not to the exact cent. Ooh, okay, well that's odd. Normally the E-mini would be very, very close to what's going on at the NASDAQ. But here's the rub, as they say. With the E-mini, you're trading $12 a tick, right? So at 12.50 a tick versus $5 a tick on the NASDAQ, you can, in theory anyway, take twice as many NASDAQ contracts as you can E-mini contracts, right? Because you've got $5 versus $12.50. Depending on how the trade sets up, sometimes you'll even be able to take 3 contracts for every E-mini contract. Why is that important? Well, the obvious reason is even if you go all in, all out, you're going to earn 2, sometimes 3 times as much money as the equivalent E-mini trade. You also give yourself a little bit more flexibility in that you can, if you're trading multiple contracts, sometimes you can take profit, you can leave a runner in play. Trying to manage a single contract is very, very difficult because there's always that decision. Do I try to run it out? Do I try to, or do I take profit? That's a real problem trading single contracts. As you can see, the NASDAQ has got plenty of volatility. And I think, for a day trading market, it's pretty tough to beat. Just one other comment about losing trades, because like I said, you will incur losses. Doesn't matter how long you've been doing it, you will incur losing trades. Ed Sequoia, one of the best known traders of the 20th century, or certainly the latter part of the 20th century, he said something to the effect of, if you don't want to incur any losing trades, stop trading. And this from one of the best traders ever. You should never take a loss personally. If you take a losing trade, that does not mean you're stupid. It does not mean you are a bad person. It means you misinterpreted what the market was showing you, or you just flat out got fooled by the market. The market does try to fool people, Likewise, with a winning trade, you shouldn't get too full of yourself. It really is a 50-50 proposition here. It's almost like spinning the roulette wheel at times. And yes, it's so much nicer to have winning trades than losing trades. But like I said, don't beat yourself up over it, and don't get too too full of yourself, for lack of a better choice of words. It's a business. It's your business. You have to learn how the business works. You could be selling used cars. You could be managing a McDonald's. You could be Sam Walton. It doesn't matter. It's a business. You have to learn the business. And if you learn the business well, then you'll make some money. But as I learned the other day when I broke a clamp on one of my tools here at home, and I go to replace it, there's a clamp on my table saw. I did something stupid. I wheeled the table saw in a funny way, and it broke the clamp. The new clamp costs almost as much as the stand. And the kid said to me, "Well, education is expensive." Yeah, I thought that's right. Education is expensive, but so long as you learn, that's okay. All right, enough of the preaching already. Here we go. It looks like we did make our way back up here to the high of the morning, and we're seeing some active selling here. This is making me inclined to maybe be a little bit more bearish again. We did get a number 2 signal here. We did get a discretionary signal here. I would like to see a little bit of a pop up, and that would open up the opportunity for another number 2 signal to sell. The hawk already bearish here. We got ourselves the first micro macro cross. The eagle still bullish. Okay, so we're getting that little bit of a pop up. The next sell signal, I would be open to selling. Now, this is not going to, it's likely not going to qualify as a number 2 signal in that you're going to get the signal prompt, because we may be a little bit far from the test of this high. Remember, a number 2 signal, the first component is we have to have a trend to reverse, right? It's a counter trend signal. The second component is the retest of the extreme. In this case, the extreme is the high. I'm just going to get ready here on my sell button. And this retest may be a little bit far removed from that retest of the high. So visually, it will be a number 2 signal. But as far as the programming goes, it may not print as such. So it's counter trend. I'm locked in. I'm in manual mode. I'm just going to take a single contract. I've got my stops enabled, so I'll get my stops above the high, which is where I want them to be anyhow. And maybe we'll see the market move back here to around that 73.70, maybe even 73.60 area. Maybe. There it is. All right. So I said I wasn't going to do this again, but I'm going to do this again. I'm going to try to run it out and see just how far we might go with this one. Well, if we go anywhere with this one. Oh, hold on. Don't want to roll my stops just yet. Let's disable that. Oh, look at that. They nailed it right on the number too with this last swing low. So I guess the first obstacle is going to be the median line, that gold line, which is currently coinciding with the hard edge of the trading band. Once we're below there, well, there was this little swing high. Looks like it came around 73.80. That could make for a decent profit objective. After that, it looked like 73.70 was a good mark, and then back down to the low du jour. We'll see how things unfold. Pretty quiet though. If we get now below this 73.86, 73.85 area, we're going to start encouraging some selling, and we're going to start trapping some buyers out of their position. So we may see a little bit of a, there we go, there's a little bit of follow through as we start to trap some of the traders out of their weak buys. We would call those the weak buyers. Michael's asking, how do you add a break-even target? Okay, there's two ways you can do it. One way is to right-click on your chart, and you can select a break-even. You can only do this in a live trade, so once your trade is actually working. And you can, of course, you can move your break-even wherever you want. Your auto break-even, you will do from your, and I'll show you here on the, never change an active position. So I have an active trade going on. Do not make any changes to your trade manager or anything when you have an active position. That's what I'm going to show you here on the Falcon. So right click on your chart. You're going to go to your strategies. Select your trade manager. You're going to need to turn it off. This is why you don't do any changes while you have an active trade. So your Enable tab, you're going to change defaults, click Apply. That's going to make your trade manager disappear. So now you've turned it off. And if you roll here to the very top, there's a couple of interesting settings that you can do. First off, to answer your question, your auto break-even parameters are right here. To enable it, turn it to true. And your break-even trigger by default is set at 15 ticks. Usually I'll go anywhere from 75 to 80% of my profit objective as my break-even. I figure if the market gets 3/4 of the way there and all of a sudden fails, well, then I may as well take a break-even stop out. So with the Raptor in the NASDAQ, I'm typically looking for a 20-tick move. So 15 ticks would be 3/4 of that. So if you want to make any changes, if you want to make it looser, if you want to make it tighter, that's where you do that. The break-even offset is how much profit you're going to capture when the break-even trigger is hit. So by default, it is set at 1 tick, but you can save 2 or 3 or 5 or however many you want. Depends how hard you want to squeeze the trade. The idea is that you at least recover your commissions. Your invalid, while we're here though, your invalid trail stop by default is set at 10 ticks. I would encourage you to set it at a higher value. And I'll show you in a moment what the invalid trail stop does. But for now, just know that that's where you go to change it. When you've made some changes to your trade manager and you've kind of customized it the way you like it, it's not a bad idea to save a template. So if you go here to your template manager, you can go here to save, just click on it and give it a name, whatever you want to call it, My Raptor or whatever. And just type in a name there, press enter, and then it will save it as a template. So what that means is the next time you load a clean chart, you don't have to go through the trade manager and make all those changes. You can simply load your template. And then of course, if you mislabel it or whatever, you can get rid of the template also. Go back to your enabled tab, turn it back to true, apply it, and now next time you place a trade, you will have an auto break even value. Now I mentioned the invalid stop. Let's take a look here. Okay. So you can see here, according to the ATR stop strategy, this is where if I hit the sell market button, this is where the trade manager would automatically put my stops. Well, what if I wanted to buy? What if I hit the buy button? I don't want my stops to be there. I want my stops to be below the market, right? Because I'm buying. Well, that's where your invalid stop comes into play. Because if we bought the market at this point, placing a stop up here makes no sense. We want our stop down here. So as I said, by default, it's only 10 ticks. Well, with the NASDAQ, that's only a point and or pardon me, 2.5 points. That's very, very tight to where the market is currently trading. So the invalid stop will place a stop 30 ticks away if I hit the buy market button. And of course, it's a live order once that stop is placed. So it doesn't have to stay there. If I want it tighter, I can bring it in. If I need it to be looser, I can take it away. But like say, for instance, I wanted to buy off this signal. If it's only at 10 ticks, it would print the stop right here. If the market's moving quickly, I may not have time to grab that stop and get it out of the way before the market tags me out. So that's just a little tip for you. All right, we're still kind of seesawing here back and forth. It didn't get quite down to 73.80. You can see here the hawk very, very neutral, very, very sideways. As is the Raptor, our trading band in quite a twist. Come on. Yeah, look at that. The darn support zone here, just not letting go. Not yet, anyway. All right. Well, I'll just have to try to stay with this. It looks like they're going to make a run here at the highs. I may have caught myself on the wrong side of the market. Yeah, John, I agree. John says it looks like a good time to stop trading. Fridays can be like this. Very often what will happen on a Friday is traders will get busy early. So we'll see a move the first half hour, first 45 minutes, and then it's like they do their paperwork, they pack up and they get out of the office, go home. Or the market will be like this. It will be very non-committal, and you'll just get a whole lot of back and forth sort of nonsense. And there you go. Okay, so I was wrong. Does not look like they want to head any lower today. So if they don't want to head lower, there is a chance they may try to head higher. So what could I have learned from that trade? Right? So I just took a bad trade. What could I have learned from that trade? Well, the setup itself I don't think was all that bad. Maybe the trading band was not as wide as it could have been to anticipate a reversal. Okay, so that's one note I'll make in my trading journal. Maybe I was bringing some of my own bias to the market, thinking the market has to move lower today. Of course, the market does not have to do anything. Maybe I should have been a little bit more aggressive on my stop, especially at this point right here. So my trade once again was looking like this. At this point right here, so the market attempted to move lower. Okay, it stalled. Attempted to move lower again. This is kind of the sellers laying it on the line, and then the buyers coming back again. At this point, I should have started to think maybe I'm on the wrong side of this position, and I could have perhaps rolled my stops in a little bit, maybe about that swing right there. Because I think you'll see there was very little hesitation after that swing. The sellers actually did give it one more go, and then the buyers got all over them. I tried to give them a chance, but as soon as they made this last little rally here, I knew I was kind of stuck on the wrong side. There was a slight hesitation at the high, but then, of course, that failed. It just poked straight on through that. And John's asking, is there a better time of the day to trade the NASDAQ, trade the NQ? I find the morning session is the best time to trade. Uh, if you're on the East Coast, sometimes you can do pre-market. So about an hour before, you'll often see a decent move. I'm here on the West Coast though, so things can get that's a little early for me. But you see there's some pre-market reports. You see how quickly all this unfolded at around 5:30? This would have been impossible to trade because this would have literally developed within a couple of seconds. And it's not normally like that, but just to show you that there can be some decent moves pre-market. So again, if you're on the East Coast, you can certainly check out the NASDAQ about an hour early. There's usually a lot of volume actually and a lot of trading that goes on pre-market. And then from there, it's the first hour after the open. First hour is probably you're going to find your best opportunities. Occasionally, just before lunch hour, you'll see a little bit of a move. So maybe from 11:30 Eastern, sometimes you'll see the market make a move. But then normally it's a bit of a dud until the last 45 minutes of trading. So just before it goes into the close. Chances are pretty good if you don't see a significant move within the first hour, you're probably not going to see too much develop. While we're waiting here, again, just a reminder for those of you who joined the trading room late, no trading room this Monday. I am not going to be available this Monday, so no trading room on Monday. Well, again, we're just going over the same numbers that we have been retracing since the open. Here, once again, the daily chart, and you can see haven't really gone too far from where we started the day. Here we are with another number 2 signal, another counter trend. After a breakout, right? We broke above the high, the breakout, the retest, the failure. Do I dare try to short it again? There is a second push opportunity here, so the signal's engaged. We can see it's flinching on this bar, so you could use that bar right there as your signal bar. Well, here, why don't we demo that? So we'll throw that up there, 2 swings back, essentially above the high. One thing's for certain, if the sellers manage to push the market back down into this trading range, they're going to try to move back down here to where the market bounced before, this whole 73.85 zone. If they get below 73.85, there will be a substantial move lower. How can I say that? Well, look at all the buying effort that was here. There was buying here. There was buying here, here, and then of course here, where they finally overwhelmed the sellers. Where do you think, if you were a buyer down here, you would place your exit stops? Well, they're probably, wrong button. They're probably sitting right about here, aren't they? Probably not all that far away, especially now that the market's rallied up a little bit. Everybody's probably rolled their stops somewhere around the whole 73.85 area. So that's a lot of sell orders. Remember, the opposite of a buy order will be your sell order. That will be your exit order. Getting a whole lot of back and forth again. Now we're getting a hard edge bounce. We'll scrub that. If we come back with another sell signal, we will have that 232 set up. And maybe I'm, again, bringing my own bias into the market today, but I really thought a sell, we would see a little bit more of a bearish move here today. Oh, okay. Here's a good little tip for you Apple users. John said, Eric, I found out that VMware Fusion will support multiple monitors for Apple. There you go, John. If you have a birthday coming up, you'll know what to wish for. Hint heavily. All right. A little bit of a struggle, maybe. We may get that 232 set up, which opens the opportunity for a short. And that'll be the last trade that I will attempt today if we do get that formation. And there it is. And there's the signal. So it did not print. Oh, there it is. It did print as a number 2 after all, once the signal engaged. But when you can anticipate the signal, it's a little bit more helpful. Okay, so there we go. I have my trade set up. I'll take my break even here on the break below the low. All right, let's see if there's any sort of cooperation here this morning. And again, I'm swinging for the fences on a day like today. I should probably just take my profit if I get it. No, the buyer's still quite strong. We'll see if they come down a third time now to the 73.92, 93 zone and bounce again. I'll be a little bit more aggressive with my stops, providing they don't stop me out in the meantime. It is a balancing act, you know, especially when the market's going sideways. I mentioned the other day, this is the adult version of the kids' game of tag, where the objective is not to get tagged. Michael's asking, why did you set your target at 30 points? Well, first off, okay, here, the easy answer is it's near the low of the day. The second longer answer is we've got a lot of buying here at around the 73.85 zone. You can see there was buying here, 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 here. Every time the market made a little swing higher, there was active buying going on. Because there's so much buying here, I know that the buyer's stops are probably nearby. They're probably like in this zone. An exit order for a buyer is a sell order. So there's going to be a lot of sell orders stacked around the 73.84 zone, anywhere from 73.80 to 73.84.85. If the market heads lower and hits this zone, it's going to trigger a lot of sell orders. And that can lead to a very brisk move lower. We saw the opposite happen back here when the market took out all the sellers. It's what traders refer to, or you may have heard it referred to as trapping traders. So you can see there was a very active area of resistance here, selling going on here, selling going on here, here again, and then it finally broke out. And look at the resulting move. It was kind of quick, it was prolonged. And that's what I'm hoping for here. I'm hoping that if the market heads down here, gets below that 73.85 area, we'll be able to trap a few traders out of their positions and add a little bit of fuel to the selling. Let's see what happens here, if there's any follow through or if it's going to be a bit of a dud. And you know what? I'll bring my break even over here now. So essentially, Mike, all I'm doing is I'm trying to hit a home run, right? I do have my profit target. I'm already exceeded my profit objective. Going all in, all out would be the smart thing to do. All right, I'm getting a little bit of a bounce. I'm going to force the trade to break even now using my break even button. And let's see what happens if we breach 73.85. And I will also get ready here with a more aggressive stop strategy. My bar high low, maybe my parabolics. All right, so notice once again, active buying at 73.85. So these are some buyers who think this is still a great zone to buy at. This is a great price for the NQ. They're going to try to buy it up. If the sellers knock them down, they're going to get stuck in their position and they're going to have to exit. Am I going to be able to ride out the swing? Okay, here come the sellers. Let's see if the sellers can do their thing. Dan asks, is your break-even trigger higher than the current price? So it means that it is triggered after it passes the trigger? Yes. So what I did is I got tired of waiting for the break-even trigger to be hit, so I forced the trade to break even with my break-even button. I could just delete this, but here we'll see if the market will take it. Okay. If I had not already forced the trade to break even, when that break even trigger got hit, it would automatically move my trade to break even plus one tick. All right, here we go. A little bit of a tug of war. Let's see if they can get below 73.85. Nope, we're getting a crossover sell forming. That's the number one signal, the cloud crossover. So things looking maybe a little bit more bearish. Oh, what a sticky price. There we go. Come on. Come on. You can do it. All right, well, we're kind of flirting with some. We've trapped a few of the early traders, the guys that had their stops really, really tight, and girls. It's not just the guys that place their stops too tight. All right, let's see if we can take out a few more. Come on. Here we go. Normally it moves a little bit faster than this, but it is a Friday. All right, I'll move now to my parabolic mode. There we go. Okay, we're starting to catch some of them. You see, they're being forced out of their positions. A little bit of scrambling. They're trying to buy the market back up. Let's see if the sellers knock them down again. So now we need to get below 73.76, and then we should see a retest of the low of the morning. So maybe I'll let the parabolic take me out. Well, a little sticky around 73.75. Come on, don't bounce too high. Let's go. All right. Okay. Well, there you go. Probably we'll see another continued push lower, but we're still in the same price area. I think we're back where we started the day. Yeah, pretty much. Here again, the daily chart. Haven't moved very far overall. I think we're just going to see more back and forth. At least that's the way it seems to me right now. All right, gang. Again, reminder, no trading room on Monday. Have yourselves a great weekend. I will see you on Tuesday. Bye for now.